In the ever-evolving saga of American politics, few institutions command the reverence and deference that the Federal Reserve enjoys. This esteemed body, tasked with steering the nation's monetary policy through calm seas and turbulent storms alike, has long been a bastion of independence, shielded from the capricious winds of partisan agendas. Yet, as the 2024 presidential election looms on the horizon, whispers of potential interference echo through the corridors of power, threatening to erode the central bank's hallowed autonomy. The rumblings of discontent originate from an unlikely source, the allies of former President Donald Trump, who purportedly harbor ambitions to assert influence over the Federal Reserve should their candidate reclaim the White House. According to reports, draft plans are being formulated to facilitate this audacious endeavor, with one proposal even contemplating the dismissal of the current Fed chair, Jerome Powell, a figure handpicked by Trump himself during his previous tenure. Such overtures have ignited a firestorm of concern among economic luminaries, chief among them Kenneth Rogoff, the esteemed Harvard professor whose prescient insights have long been a guiding light in the realm of financial discourse. In a candid interview with Bloomberg TV, Rogoff sounded the clarion call, warning that any attempt to undermine the Fed's independence would inevitably invite market jitters, soaring inflation expectations, and a precipitous decline in the value of the almighty dollar. If you take away Fed independence, investors are going to get jittery, inflation expectations are going to go up, the dollar is going to tank, Rogoff declared, his words carrying the weight of decades of economic wisdom. So happily, for better or worse maybe, I think markets will throw a pretty cold bucket of water on the president if he tries to do that. Rogoff's assessment resonates with the echoes of history, for the annals of economic chronicles are replete with cautionary tales of nations that succumb to the siren song of political interference in central banking. From the tumultuous financial upheavals of Argentina to the hyperinflationary abyss that engulfed Zimbabwe, the consequences of compromising monetary policy autonomy have proven catastrophic time and again. Yet, the allure of influencing the Fed's decisions extends beyond the Trump camp, as Rogoff astutely observes. The progressives have ideas for taking away Fed independence too, he notes, acknowledging the universal temptation that beckons to those in power, regardless of their ideological leanings. They're not at the tip of the tongue for President Biden or Jared Bernstein and his advisors, but there are ideas floating out there. Echoing Rogoff's sentiments is Richard Fisher, the former president of the Dallas Fed, whose seasoned perspective lends credence to the perils of attempting to control the central bank. I can tell you this, I think I know Jay Powell very well as a friend. He could care less, Fisher remarked to CNBC, referring to the current Fed chair's unwavering resolve in the face of political pressure from both the left and the right. As the debate surrounding the Fed's independence rages on, the implications for the nation's economic trajectory are profound. For those in the White House harboring hopes that timely interest rate cuts might propel a presidential re-election bid, the outlook has grown increasingly grim in recent weeks. Though Powell himself had hinted at optimism for such cuts in previous commentaries, a relentless surge in inflation has upended these expectations, leaving futures markets now forecasting a solitary rate cut in November, a far cry from the initially anticipated trio of reductions slated to commence in March. In this climate of uncertainty, where the sanctity of the Federal Reserve's autonomy hangs in the balance, the words of Kenneth Rogoff resonate with prophetic clarity. If you take away Fed independence, investors are going to get jittery, inflation expectations are going to go up, the dollar is going to tank. It is a warning that should give pause to any political force contemplating an encroachment upon the central bank's hallowed domain, for the consequences of such actions could reverberate through the nation's economic fabric for years to come. As the 2024 election cycle unfolds, the American people would do well to heed the voices of seasoned economists and financial experts, whose counsel serves as a bulwark against the perilous temptation of subjugating monetary policy to the whims of partisan agendas. For in upholding the Federal Reserve's sacred independence, we safeguard not only the stability of our financial markets, but the very foundations upon which our economic prosperity rests.